Well, after a week of violent fluctuations, global markets had something of a breather on Friday, although that doesn't mean the dangers have suddenly disappeared. First up, we'll take stock of how things panned out, so it's over to Jayne Edwards.
Thanks, Alan. Rarely have investors been more grateful to see a weekend. The US share market closed the week with a comforting 1% gain on the Dow and 0.5% on the S&P 500 and Nasdaq, a result that gives us a brighter lead-in for our local markets tomorrow. Investors chose to focus on the positives of a lift in retail sales in the US, coupled with a ban on short selling of financial stocks in Europe, which brought some welcome stability to Eurozone banking shares. But US consumer sentiment has slumped to its lowest level in 30 years amid the political and economic turmoil of the past few weeks. A clutch of retailers report next week, which, along with US housing figures and high-level Eurozone meetings, should set the tone of investor sentiment. Looking at how the dust settled on major share markets, the US finished lower, the UK was up slightly, Europe and Japan slumped further, while Australia somehow managed a 2% rise. With more on that, here's Marcus Padley.
Well, the stock market is officially a casino. We moved in a 12% range from bottom to top this week, and on Tuesday alone a 7.4% range, which I think was a bit of a record. At one point this week we were down 25% from our year high, 15% just this month alone, and we're just 20% off the GFC low. And although there's talk of a GFC 2, in my humble opinion, we're still in GFC 1. Despite all that, the market being the main issue, some companies did shine through with good news, including the Commonwealth Bank, who announced a record profit up 12%. They've just made $6.8 billion out of us, so we're not feeling too sorry for them. They go ex-dividend tomorrow. We also had the National Bank with a trading update in line with expectations, and Telstra had a better than expected set of results, still down 17%, but they told us to expect profit growth next year. Not a lot, but profit growth is good, and they confirmed the 28-cent dividend for the full year. They go ex-dividend 14 cents on the 22nd of August. Apart from that, there were a host of results and earnings guidance this week. Good results from News Corp. Great performance this week. Looks like the phone hacking scandal was nothing but a buying opportunity. Record profit from Cochlear. Good set of results from Webjet, Domino's Pizza, Bendigo and Adelaide Bank and Coca-Cola, and JB Hi-Fi surprised us for a retailer, told us to expect a solid outlook for the year, and their share price went up. The bad news came from David Jones. After their fourth quarter sales fell 10%, looks like it's put their first half guidance under threat, although they have just had a profits warning. BlueScope Steel had a write-down. QBE got clobbered after the FOMC said they were going to hold rates for the next 2 years, which is not good for the returns on QBE's US bonds. Share price looks like it's already discounting a downgrade and dividend cut. And there were rather flat performances after results from Stockland, Singapore Telecom, Bradkin and Alumina. Winner of the week this week was Coal and Allied, up 28% after a bid from Rio and Mitsubishi. And loser of the week was Coffee International, down 23% after final results, a $70 million loss and no dividend.